Hi everyone and welcome to my market report analysis videos with me, Rich Market Analyst at Hantec Markets on Monday 29th of January. The question is this week is, are we going to get a dollar rally? Dollar has been under significant strain in recent days and weeks, and are we in the midst of a potential sort of dollar rally scenario? Nothing yet really confirmed on any sort of technical indicators, although there's a marginal turnaround we're seeing across the majors today, which has driven a slight bit of dollar recovery across them. But nothing really yet confirmed, and I'll show you through the major pairs when I sort of look at them later, that you can see that there are some potential levels that we need to look out for, but nothing yet really sort of suggesting that there's going to be a sustainable dollar recovery. You can see that the 10-year Treasury yield has sort of broken higher again. We had the growth data on Friday for the US that showed that the consumer remains very strong. Consumer spending was a strong component for growth. And subsequently, we're seeing the 10-year yield continue to rise, but the 2-year as well. And also, we're looking at the yield curve, which sort of remains basically flat on where it has been in the last few weeks. Nothing too, I shouldn't use the word flat actually thinking about it, but basically where it has been in the last few weeks. Yeah, but there is the possibility of this unwinding of the dollar, possibly back towards 90, which is the key level. 91 is also a key level as well. So sort of 90 to 91 would be a sort of a rebound area if you were to see a dollar rally setting in. But nothing yet, as I said, confirmed. Now, in terms of equity markets, we had Wall Street climbing ever stronger on Friday, and just continues to accelerate higher. Earnings season in the States has been very positive, and we've got the likes of Facebook, Amazon this week, which could have a key factor in these markets. But certainly at the moment, Wall Street remains strong, and interesting that we've seen a little bit of a stalling of a bit of a rebound that we saw on Friday. Bit of a stalling on these European markets today. But yeah, there's just a bit of contemplation as to the next move. But generally, the movement on the dollar is key at the moment. Now, in terms of data today, we're looking out for core PCE. Core PCE is the personal consumption expenditure and is the Fed's preferred inflation measure. And it has ticked higher in the last few months on the core PCE. Expected to be 1.5 again today. So again, still no real sign of inflation sort of building up in the States yet. But yeah, I think average hourly earnings, for example, on Friday will be a key factor. But PCE expected to remain at 1.5% today. So my chart today is the Kiwi dollar. Now, as I said, the US dollar is sort of showing signs of strengthening. And you can see this uptrend on the Kiwi dollar, which has been intact in place for the last 6 weeks. It hit that high of 74.35, which is the September high, and rolled over. Shooting star candle last Wednesday, and we saw subsequent candles a bit corrective as the markets just sort of posted lower highs on the subsequent days and lower lows. And you look at these momentum indicators, the stochastics are starting to roll over, and the MACD lines and the RSI. So is this going to start to put pressure on this uptrend? Well, it certainly looks as though that could be the case still today. We've hit 73.15 and bounced, but 72.90 was Friday's low, which will become certainly a key level. I think having sort of closed higher on Friday, that would, if you then lost that support at 72.90, that would be something to look out for. Sorry, that's the euro. But you can see in the last sort of couple of days, lower highs forming. Momentum indicators not so positively configured, are they, on the hourly? When the RSI had previously sort of been 35 to 40 on the downside, it's now sort of 30 odd, but failing under 60. MACD lines are also failing underneath neutral. So it's more of a corrective look to these hourly indicators forming. So it could put pressure on that 72.90 level. If that were to break to the downside, you'd sort of be looking at 72.30, 72.40. as your sort of key levels to look out for, this sort of trading range here from a couple of weeks ago. But we could start to see the market sort of just beginning to sort of lose its impetus of the uptrend, certainly, and that may turn into a correction. We haven't had the indication yet that it will do. It could just be that the market just starts to go sideways. But a little bit of pressure starting to sort of take hold on the downside, and yeah, it'll be interesting to see how far that takes it. So watch out for that, and I wish you good luck in your trading today, and I'll speak to you later. Thank you.